Hi everyone, today I'm going to talk about the free stocks that I have bought, not this week, last week, and I'll go through these free stocks and why I bought them. I'll spend a minute or two on them. It won't be a massive deep dive just because otherwise the video would be too long, but I will spend a minute or two talking about them, and I want to just, as always, keep you guys updated with what I'm buying, what I'm selling. This channel's built on transparency and kind of showing you the good times, the bad times, what I'm buying, what I'm selling, so you know exactly what's going on. I'm not trying to hide anything for you. I'm not trying to sell stocks out in the background or disappear when things go, awful and the stock market has a downtrend. I'll be here in the good times, I'll be here in the bad times, and right now, after yesterday, we're definitely in the bad times. So yeah, we'll go through these free stocks. These free stocks are a bit more of my safer plays, a bit more of the big tech and stocks that I am trying to build into quite decent position sizes if I can. To do that, they have to stay down though at these prices for a little longer, but I did take the opportunity to buy into them. I took a little bit of a risk actually because a lot of these companies actually then went to report earnings, and luckily enough it did work out. It was a bit of a 50-50 shot, but obviously I had the aim of what they'll be in the long term, not what they're going to do later in that week of earnings. But yeah, we'll go through these free stocks. And as always, if you do want to know what I'm buying and selling in real time, Patreon is the place to be. It is the highest Patreon to subscriber count on YouTube, which I'm massively proud of. And just to let you guys know, on Patreon, there is the second exclusive video coming up. It's going to be a review of the companies that reported earnings. I'll have that out for you probably tomorrow. I've got, I think, one more conference call left to go through, which I believe is Visa. So I will get that done in the next coming few hours or at some point today. But we'll get stuck into these free stocks. So first of all, the obvious one that I'm going to cover, because I made a separate video on it already this week, and that's what I mean. I've already got, if you want a bit more detail, I've got stock videos out here that does a full look at some of these stocks. And Google was that. So Google was the first stock that I bought, and it was a new stock. My first new stock since PayPal, my second new stock of 2022, and Google has finally got down to prices where I went, you know what, I need to buy this one. I'll keep this nice and brief because, like I said, I did talk about it a couple of days ago. But yeah, I bought Google just because I feel like it's got back to really good valuations. I should have bought this in 2018. In 2018, it had a period of time where it flatlined, and a year and a half of doing nothing, which stocks can do, and then it went on a massive run. Now looking at Google, it's having something very similar again. It's having a bit of a 6 months period, well, nearly up to 12 months now. 12 months period of the stock actually doing nothing, as you can see here. Yeah, we've actually gone over 12 months with the stock doing nothing, and it's actually on a 20% dip, which is very rare for Google to dip 20%. And with Google dropping now and having a bit of a flat line for the last 12 months, this now looks at pretty good valuations for me. It's a 1.5 trillion market cap company, so it's a big company. It's not going to be a stock that 5x's, 10x's, because it's already quite large, but I do think I'll double my money up in this one in the next 5 years. Trades down at 21 times earnings, which I think, once again, for a company of Google, I think is a pretty good valuation. And when you get Google, the big thing is the moat. It's an unbelievable moat. What you're getting here, Google Chrome, the cloud side of the business, YouTube, massive moat. One of the biggest moats. For someone to come in and replicate what Google has, is very hard for them to do that. So there's a lot of parts of the business growing, and when they reported earnings last week, it was just a bit of a confirmation once again that this company is a beast. The EPS was a little bit of a miss, but I think that was more analysts missing it rather than Google missing it. They were improving the company slightly with some investments, and there was also some change in an equity investment, I believe it was, and also the revenue still grew 23% year over year. And, you don't normally get the kind of companies here that is 21 times earnings. This is on a price to earnings basis, like cheaper than Coca-Cola and Procter and Gamble at the moment, which is just unbelievable how much these stocks are getting disrespected. No one wants the aggressive stocks, everyone wants the defensive stocks at the moment. Yeah, to be picking up a company that's doing this is unbelievable. That's with quite weak YouTube growth as well, which I think will come back as well. Google actually produces that much cash that they actually can afford to do a 70 billion buyback, which is unbelievable. And like I said, when you look at Google as a company, I think it's already undervalued, which is the key thing, and then I think it should be a lot higher when this company carries on growing, 20%, well, probably high teen rates going forward. I think the profitability will go back to really good growth. They're never going to be putting in the next few years 100 billion in profit, and that 100 billion just goes straight down to that bottom line. It's got a very good balance sheet, sits on 134 billion in cash, and that's what it can afford to do them big massive buybacks that we talked about. So yeah, this one here is a company which in my opinion is massively undervalued already, has fantastic growth and an amazing balance sheet. It's a top quality company, and I'm happy to start buying shares in Google at these sort of prices. If you can go lower or flatline at these prices for a bit longer, that'd be absolutely amazing, and they can build up quite a good position in this one. So yep, big fan of Google at this sort of price. Moving on to the next one, same again, another big tech, once again 15 times earnings, cheaper than Coca-Cola, cheaper than Procter & Gamble, and once again we're talking about a major platform here that has got amazing balance sheet, good amounts of profit growth, and is probably more disrespected than what Google is. So it is Meta. Now Meta is down a lot more than Google. Since the September time, the share price has lost 44%, which is a massive drop off. It's down at 15 times earnings, and actually Q1 was okay. I thought it was okay. I didn't think it was stand out as blowout amazing, but I just thought it was okay. But the stock did jump off their earnings, which you can see here. And actually since those earnings, the stock has actually gone up 19% now. So it would have been up even higher if it wasn't for that ugly day yesterday, 27%. So I think that with Facebook reporting okay earnings and the stock going that bonkers off the earnings report kind of shows how low Facebook is valued at right now. 15 times earnings, you're talking about a company that grows 2 or 3%, and I think Facebook is going to way outperform that. Even in their earnings report, which had quite weak growth, 7% growth, this is pretty low, and I think we'll go back to teen growth, and picking a company that grows at this sort of rate, that sort of valuation is just nuts. The earnings was okay, like I said. They've still got some big headwinds coming up with the changes of the Apple changes. They've got obviously the user growth, hard comps to go over, the Russia situation. So there's a few hard comps going on here, but I think long term Facebook's going to be okay. People are still going to use the platform. I think they'll adapt to some of the competition like TikTok with Reels, and I think Reels will sort that problem out. So in my opinion, I think revenues will be going back into the high teen range. I think profit will move back in the right direction. Obviously they're heavily investing into a lot of the metaverse at the moment, and I think that when the platform goes back to growing, that will generate enough cash that covers the money that they do put into the Meta, and also have a lot more going back down to the balance sheet. So they are in a little bit of a tough comp and competition and changes point of view here, but I think a lot of this will resolve over the coming few months, and what we'll have is still a company that puts in really good revenue growth, we'll go back to really good profit growth, and we'll do very well going forward. And like I said, this company produces mass amounts of profit, good amounts of revenue, and we'll go back to good revenue growth. They have a lot of cash sitting on that balance sheet, really strong balance sheet. So yeah, they're sitting on 43 billion worth of cash. And the company is still founder-led with Mark Zuckerberg there, which I always think he gets a little bit of grief, and I always think, I always think he does a really good job. He's always been there, he's reinventing the company, he's been behind, the business that went from the Facebook to the mobile platform, to then having the story mode, to buying Instagram, Messenger, WhatsApp, Oculus, now moving into the metaverse. He always has his critics, but he always redevelops that Facebook platform to keep it going very well. And when you look at Facebook, a metric point of view, it's just incredibly cheap. It's a revenue growth. It has amazing revenue growth. Profit beast, 4 times sales. If you look at total enterprise value to EBITDA, it's down at an 8. It's never been at an 8 before. Even in the CV dip, it wasn't an 8. Even in the 2018 stock market crash, it was a 9. So yeah, I think this is getting massively disrespected. So I'm buying Facebook, and I think Facebook will do very well, or Meta should I say. I always forget that. I think Meta will do very well over the next few years. I expect this to be going back to $400 shares a share in the next few years for sure. So I did buy some Facebook, and the last one is PayPal. So I did buy another big tech here, which is PayPal. Same again for PayPal. I looked at their earnings, and I thought their earnings were okay. In fact, I'd say they're probably the worst ones out of Google and Facebook. And the stock was up. The stock was up after these earnings report. It's given a little bit more of it back compared to a Facebook, but you'll see here that it did jump 11% after their earnings. And in fact, until yesterday's horrible day, it was actually up 12%. So again, I think at 20 times earnings, there's just a lot of negativity priced in with PayPal. So even though it brought okay results out, it's just so cheaply valued that, there's so much negativity priced in that when people go, oh, it's not too bad, that it actually jumped. And I think PayPal's going to get in the future a lot further ahead than, just okay. I think it's going to go back to really good growth going forward. And look at this now, it's $85. The last time that PayPal was valued at $85, you're going back to, the back end of 2019, which is crazy, because when you look at the financial performance in the last 3 years, it doesn't justify that. So it's nuts. PayPal, same again, it's going through a bit of a tough spot, but still it did okay with their earnings. Outlook was cut though. It looks like the headwinds are still persisting, and I think that because of the Russia situation, obviously it already has a lot of headwinds because of the eBay situation, which should go away in the back end of the year, and that's where we should see PayPal put in really good numbers again. The Russia situation then put a few more headwinds on it again, and that's probably why the outlook has been cut. But same again, it's still growing at 7%. I think it will go back to high teen growth. I think profit will go back to high growth once the revenue keeps increasing. So once again, a bit of a short term, couple of tricky situations going on, and I look at the share price and go, it's still a brilliant company, and look at the loss on the share price, it's bonkers. So yeah, there's a lot of things in PayPal still moving really good in the right direction. And same again, you look at the growth, it'll move back in the right direction, profit will come back and move in the right direction. And like I said before, you look at its value at prices it was at in 2019 when it was doing 2 billion in profit and 15 billion in revenue. It's now doing 25 and 3.8 billion in profit, which is just shows you the massive dump off that it has had, which is, I think, really unjustified. And also a really bullish sign with a lot of what's happened with PayPal is that since it really had started to have this decline around July time, what has happened really in the last, I'd say 2022, is the insider ownership has been really aggressively increasing, which is a really bullish sign. Was a little bit gutted they lost their CFO, but this is really bullish to see a lot of insiders really confident. And same again, from a metric point of view, PayPal is incredibly cheap now, 3 times total enterprise to revenue. On adjusted EBITDA basis, it's down at a 14. I mean, it wasn't that low once again in the CV times, and once again the lowest that has been in the 2018 crash was a 20. So yeah, it stands out as being really cheap for me for this one. So yeah, picked up some more PayPal. So those are the 3 stocks I bought. Like I said, focusing a bit more on big tech, building up them kind of a bit more safer plays with good revenue growth, good amounts of profit growth going forward, strong balance sheets, not that much high risk. As I said, these stocks are stocks that won't bring in massive returns and don't have that higher upside, but at the same time they don't have a higher risk. And with them being all on quite a bit of a dip at the moment, I'm capitalising on that, and I'd really love to build these 3 positions up into really big positions if the prices can stay down here a bit longer. So yeah, hope you enjoyed the video. If you could, hit the like button if you're new, subscribe, and I'll see you in the next one.